And we can move on to the next panel now, which is moderated by Mr. Russell Bishop. Russell is with EBRD. He's the Associate Director. He's an Associate Director, Head of Sustainable Finance Policy, and he has a rich experience with sustainability. He has worked with the Ethiopian Prime Minister's office, so he has a very global view, and he has also held roles in the UK civil service at Her Majesty's Revenue and Customs. So, Russell, thank you very much for moderating the next panel, and the floor is yours.
Thank you, George, for that kind introduction. Can you hear me?
Yes, very well.
Yes, okay, great. So look, we've got about 35 minutes, and we've got a quite exciting topic. So we're discussing sustainable banking and what needs to happen next. And of course, there's a lot to discuss in what needs to happen next. I've got a great set of panelists and speakers that are coming to you. I see already first that we've got Ernestos Panayiotou from the National Bank of Greece. I'll let him introduce himself in a second. We've got Chryssanthi Berbati from Piraeus Financial Holdings, and we've also got Katerina Stefanidou from Thornton, and each of them represent different organizations. Ernestos and Chryssanthi from banks, and Katerina from a professional services firm. So they all have a slightly different or a different perspective on sustainable banking and what may need to happen next. I think we've heard through the course of today, and in the course of working on sustainable finance in EBRD, we're grappling with many big topics which have been discussed. We're grappling with scaling finance and meeting the financing gap. We're grappling with new issues around nature as well as climate. If climate wasn't already difficult enough to integrate in the business models, we now need to push and think about other aspects, and clearly the role of nature and biodiversity is key. We've just heard about net zero and what that looks like in practice and some of the difficulties. We're also thinking about disclosure in the context of European regulation. So there's a lot to be excited about, but this is also a complex time to be integrating this into the business models of firms and financial institutions. So to each of the panelists, and maybe I start with Chryssanthi, because you're the closest to me on the screen. But the question I've got for each of you, and maybe just a very short kind of sense for the audience, from your vantage point, if you could prioritize one thing, there's of course many things, but if you could prioritize one thing that needs to happen next to address some of the challenges in this space, what would it be? Thank you.
Thank you very much, Russell. Good to be in the panel. Very interesting discussion right before. I would say that priority is for us to act as key intermediaries in the system, as banks, I mean, and facilitate the flow of capital. I think that it is now the time to really support businesses and households in their transition journey. So help them to think about what's next proactively, and encourage the effort, but to mean what we say, walk the talk with them, and actually, as I said, facilitate the flow of financing. It's financing, it's asset management, it's advisory. So we will have to utilize and exploit in a tangible way all our resources. So I would say that from our standpoint, this is the priority at the moment.
Thank you. And Ernestos, maybe from your perspective.
Yeah, I would say, Russell, thanks very much first for inviting me to today's panel. I would agree with Chryssanthi that as commercial banks, we have a very pivotal role in pushing forward the sustainability agenda through the financing we extend, through investments we make. I'll make a point that was made also earlier today around building up the resources in the financial sector in order to be able to effectively play this role, building up resources, building up the know-how on sustainability opportunities so that we can work effectively with our clients from different sectors, from different client segments, in order to push ahead the sustainability agenda in Greece. So we know there is a big pipeline of investments coming, both in the area of renewable energy and in the area of a broader transition of businesses and households. What we need, however, is to really strengthen the teams working on sustainability, on strategy, on risk management, and very importantly, directly with the clients in the front line, so that we can understand the needs and work with them, and also work with the other key stakeholders, such as policymakers or, for example, advisors. I will give an example from the RRF experience, where I think banks in Greece were very successful in playing this role, and where we did give, I think, the right focus and importance with respect to the people aspect. So I think there was very good coordination, first of all, between the authorities, the banking sector, and the corporate world. And also from the banking sector side, I'm sure Chryssanthi will agree with me, there was very good preparation of our people in order to collaborate with clients and make sure that the absorption of the recovery fund in Greece was high. This was successful, but as the RRF matures, we need to build up our own resources, I think, in order to continue playing this role.
Yeah. Okay, so I've heard so far, as well as the financing, it's also about engagement of the clients, understanding their needs, but also having the human resources, I guess, within your own organizations and also the clients to deal with it. So there's a couple of things in there. Chryssanthi, I saw you nodding, and before I come to Katerina, that means, is there anything you want to say in response to Ernestos? Anything you want to agree or disagree with in what he was saying?
The only thing that fully reflects my thinking too is the reinforcement of the human resources that deal with the challenge within the financial institutions. We started, in another space, and we are now in a super demanding context. And I would say that the teams that need to deal with this challenge should be, top quality, and to know practically all that has to do with the modern business environment. And this is a big effort on our behalf, but I think we are committed and we will do it.
Okay, thank you. So, Katerina, from Grant Thornton's perspective, what is the one thing that needs to happen next?
Thank you, Russell. First of all, I would like to share my pleasure for being among you in this panel, and I'm looking forward to the constructive discussion. It's actually impressive, the pace that Greek banks here prioritize sustainability, ethical practices, and responsible management in order in the end to create, let's say, a long-term value and mitigate the risks associated with all these social and environmental issues. I strongly believe that major achievements for sustainable banking have already been established. For instance, from an organization structure perspective, we noted a very impressive in terms of rapidness adjustment. We can understand that important steps have been taken in the Greek banking sector in refining, let's say, a more carefully constructed portfolio of ESG initiatives that actually connects to the core of what they do. On their way to fully, let's say, integrate ESG, financial institutions, of course, still navigate through various challenges, but they have set, I believe, the pace for a meaningful progress, especially after the completion of last year's EBA climate risk stress test. So where to start from? I think that prior, in my personal opinion, unrolling the challenges in terms of importance and impact, I think that we first need to look at the whole picture. So coming to the specific question that has to do about prioritization and setting on the spotlight what we actually deem as more important. is the most suitable and to make us understand in depth the complexity and nuance involved in implementing the ESG initiatives. The truth is that the interest in ESG has never been higher, and also a second truth is that there has never been more confusion at the same time about what ESG and sustainability actually means and what it will deliver. So the part what it will deliver is as important as what ESG requires for successful implementation. And based on our experience as consultants that serve financial institutions and large corporates of different capacities, the answer from our side is that we need a universally, I think, agreed ESG language that aligns all actions in a concrete way to the one goal. And let me decode this a bit. While there have been admirable efforts in promoting sustainable finance, the lack of consistent regulations and standards across different jurisdictions creates ambiguity in debt and hinders the scaling up of sustainable banking practices. So an harmonized regulatory framework would provide clarity and certainty to financial institutions and other stakeholders, enabling them to navigate in the transition to sustainable banking more effectively. This regulatory framework, I believe, should encompass, guidelines for sustainable lending and investment, mandatory disclosures, reporting requirements, criteria for assessing environmental and social risks, but also it will establish mechanisms for collaboration and knowledge sharing among all stakeholders. So I believe that standardized regulations would promote consistency, comparability, and sustainable reporting, and this would also create in the a level playing field, let's say, among the financial institutions, fostering healthy competition and encouraging innovation in sustainable finance. However, it's important to note that while the establishment of regulatory frameworks is crucial, it should be accompanied by an ongoing dialogue and collaboration among all the players, all the stakeholders in this journey, in order to ensure that the regulations remain dynamic, adaptable, and aligned with all the evolving challenges and goals. It's impressive, that I read recently that according to the Business Commission on Sustainable Development, that achieving only the gender equity alone could increase the size of the global economy by 26%. So could you imagine this? And this brings us, I believe, back to my opening point, which says that understanding what this will bring is equally important to what it takes to be implemented. So all in all, I strongly believe that by blending a clear definition with the benefits, we take a more holistic and a less transactional, let me say, approach. The transaction process will be smoothened out and the whole process will be more natural and easygoing.
Yeah. Okay, thanks, Katerina. And I think, you raise a point that I probably grapple with and I think, many will relate to this, is the complexity of this and cutting through it in a way that is meaningful at the investment level, but also more broadly. You raise this harmonized regulatory framework, and I guess that again, that is something EBRD is working across jurisdictions where there are different regulations is something that we also grapple with. So Chryssanthi, over to you. I mean, hearing basically what you've heard, the key things to address being engagement, the resources, the kind of, let's say, fragmentation in regulations. How have you dealt with that in your financial institution? How have you dealt with that, cut through that, and actually positively contributed to scaling sustainable finance? What have you done? How have you done it?
Okay.
And what have been some of the key things that have really helped this transformation?
Actually, I think I will not advertise what we have done. We have done our fair share. I mean, given our market share in Greece, approximately 2.5 billion of limits we have in sustainable financing right now. But our target is to expand now more in this space. For us, the envelope for the next 3 years as part of our new business plan is approximately 7-8 billion in total, meaning financing, debt issuance, mutual funds, advisory, the whole envelope. And I can also share that we are currently running a cross-functional project to expand this envelope further and actually encourage even the customers that have not thought about their transition journey to start thinking about it and understand the opportunity, the efficiencies, and all the consequences that come from this. For us is, of course, a pivotal effort given the massive opportunity in our country due to the investment, the capex that will be dedicated to this. But it is also very important due to the fact that we are a systemic bank, similarly to NBG, an institutional player, and we need to support the economy and all the stakeholders. Apart from this effort, of course, I need to tell you that we focus on our own journey or our own footprint. So we have set targets for our own net zero path. And a very big part of the game is the management of climate and environmental risks. We take this very seriously, not because the supervisory authorities put emphasis on this and focus on this, but because we feel that it is our responsibility to do so and be ready for adverse scenarios that our country may face. So these are, I would say, the three pillars of work we do right now: financing the economy, support the economy, do our own homework in terms of our own footprint, and manage effectively the associated risks.
Yeah, thank you. So, and you mentioned this 7 to 8 billion envelope that you're aiming for. What are going to be some of the challenges that you're going to face in actually delivering on that, and what you're doing to actively manage some of those challenges?
For the large corporates and upper SME segment, I think also Ernestos discussed before, things are more streamlined because the customers are, corporates, they are aware, they know legislation, they know what comes in the forthcoming period. The big challenge to my mind and to our team's mind here is to proactively inject know-how and awareness to smaller enterprises, small businesses that are quite a population in our country, and individuals. For individual right now, it's all about thinking about electronic vehicle or some retrofitting in my house in case I can afford, etc. They don't see the big picture yet. So I think that we need to do a lot of work on that front.
Yeah, I think that's a really interesting point. It's easy to think of the big numbers, the big projects, the big capex projects, but actually for reach, it's the individuals and the SMEs that will be critical to this. So to Ernestos, maybe you can tell us from NBG's perspective. What has been some of the highlights that in integrating sustainability into your banking business model? What have been some of the highlights in that? I know you've got a long history of doing this, so please, if you could share some of that.
Sure, and I'll try to build on some of the points that Chryssanthi made, because I think that besides the regulatory expectations that also Katerina mentioned, we need an operating model that will allow us to implement our business strategy as well. So over the past 3 years, we worked on a number of fronts as part of our broader transformation program in a very cross-functional way, in order to enhance the operating model and really get it to where it needs to be in order to deliver on the sustainability agenda that we have. I'll mention again, of course, the people front, which I mentioned in my earlier response, but I will add 3 more points here in areas that we worked in. The first one is around governance. And if I look 3 years back, of course, ESG, especially the climate and environment part, was not at the maturity level that it needed to be. So we worked on that. We now have oversight from our board. We have a dedicated ESG committee chaired by our CEO. And importantly, we have dedicated teams in our frontline business and also in our risk management and compliance functions. The second point is that we have worked on integrating ESG considerations in our processes, more importantly, in the credit assessment and credit approval process for corporate lending. This is something that the regulator wants us to do, of course, but it's also something that we need if we are indeed going to finance the transition of the economy. So for the last year, we have been implementing obligor assessments, transaction assessments, not just from a traditional credit perspective, but also from an ESG perspective to understand which of our lending cases are really sustainable, which ones present higher climate risks and therefore need action plans to mitigate those risks. And the third point, which is a challenge, we heard it also in the previous sessions, is around data and reporting. As Chryssanthi said, a lot of the businesses in Greece are of smaller size, and so data is scarce. If you move to lower sizes of companies, besides the big, large industrial corporates that are ahead in their journey and their data and disclosures. So this is something that we're gradually building and working on. We also have an initiative at the banking system level for a common data, ESG data repository and common ESG questionnaires so that the clients will only complete this data inputs once. It's better for the client, it's good for us, and it will allow us to build the quality of data as we get more mature. So in summary, I would say that from an operating model perspective and to serve our strategy and meet regulatory expectations, we have a very busy schedule ahead. And it's something that we need to maintain focus on to serve our purpose in the economy more broadly.
Thanks, Ernestos. And maybe just can you give a brief word on maybe go into a bit more detail about how you're grappling with some of these data challenges? Because it was interesting to say that basically you have a standardized questionnaire to mean the same client only fills in one. Is there anything else you're doing? Because this is, again, a big issue for us in EBRD and something we're grappling with. So I'd be interested in if there's anything else that I can glean and take into my day tomorrow.
Yeah, so questionnaires are one, and it's going to take time to, of course, build up the data. And this is why we think there are synergies across the banks in doing so, and this is why we're pushing this initiative forward. In the meantime, what some of the banks have done is we've worked a lot to baseline financed emissions, understand them much better compared to our insight in the past, and to, of course, define net zero targets, not just for our own emissions, but also for the financed emissions. This requires a lot of the time proxies in the way in which we estimate our emissions because the data quality is not there. What is interesting is that in some of the, say, high emission sectors, there is high concentration with respect to our portfolios geared towards the larger companies. That means that in areas such as, for example, power generation, we have better quality of data with respect to the financed emissions. In other sectors, this is not necessarily the case. And so at the moment, we are, I would say, still in an early stage of building up the quality.
Yep. Thanks, Ernestos. So maybe moving to you, Katerina, because you mentioned about the fragmentation in regulations and how that might be a challenge for multinationals that are dealing with different contexts. Can you give some more flavor to this? Can you let us know how this manifests itself on a daily basis and holds back some of the much needed investment? And maybe if you could also touch on maybe some of the solutions to grapple with that.
Thank you. It's an excellent question, and in my opening statement, I also presented, our view regarding the need for the development of a continuous, let's say, and a more detailed sustainable agenda to promote the full range of sustainable activities. And in a more granular level, we also believe that, as Ernestos highlighted, that ESG data collection and quality is one of the core issues that all the key players now are facing. So what is crucial is actually to determine whether the goal is to respond, I believe, to a given reporting request or rather because the company has actually identified, let me say, the issues that are most material to their businesses in order to be able to drive the performance that they would like. The quality and the completeness of the data was also highlighted from the last climate risk stress test, and I'm sure that financial institutions and regulators have learned the importance of data completeness and accuracy through this very extensive exercise. I believe that adopting, a good ESG data ecosystem and framework is an ongoing process. It requires, let's say, a constant focus on improving the tools, the data strategies, and the overall data ecosystem, especially for the financial system and for the financial institutions that when this is not about collecting one-time information, all the firms, they need to carefully map their value chains. They need to develop a robust supply chain management framework in order to be able to engage with vendors and partners that embrace also sustainability, and they also establish reliable and verifiable collection of data. I know, of course, that addressing all these concerns at once is impossible, even for the most forward-looking and well-intentioned companies. I believe the key to success, let me say, that would be materiality. That is actually to understand which risks are relevant to the company sector and the overall operating context. And regarding the fragmentation in all these disclosure standards and voluntary initiatives and regulations around sustainability, our experience, reveals common ground across organizations, which is more or less blended with my previous points. So on the one hand, I believe all of these actions enhance the ESG mobility and drive or even trigger internal processes toward achieving the goal. But on the other hand, the process, especially for the smaller players, of translating the ESG strategy into their ecosystem could be very demanding. So again, one would say that the motivational part of these actions could be easily witnessed, but we should not neglect, I believe, the need for setting clear definitions and policies in order not to get lost in that and steer, the organization strategy to the wrong direction.
Okay, thank you. Thank you for that insight. So actually linking to that point around clear organizational strategy, Chryssanthi, I know that you've got a science-based target. You've committed to net zero, I believe. How does this influence your day-to-day? Can you give some concrete examples of how this changes what you do on a day-to-day basis? And we're going to have to be quick because we're running out of time. So if you can, in brief, please.
Of course, we are validated according to SBTi as of early this year. This has been quite an effort to do so. Right now affects the universe, subset of the universe of our corporate banking operations. So we do work with the RMs to monitor the exposures that are under SBTi approach. The targets set are for reduction of footprint CO2 emissions by 2030. But the fact that we have, let's say, 6-7 years is not something that we leave as a backloaded effort. We have started as of this year preparation. We need to report regularly in any case. We decided to do so so as to make this first step and engage everybody, also the business side. Apart from ESG team, credit team, risk and finance that are already heavily involved, to engage the business team and the RMs in the whole validation, monitoring, measurement effort. The universe is approximately 9% of our exposures, but it is almost half of our emissions. So for us, clearly is a first step to engage with the business, and we need to do more to the same direction.
Thank you. And Ernestos, just to change tack to one key instrument to scale finance and achieve net zero, the role of green bonds. I know you've been very active in that area. What are some of the existing barriers to scale up in this area? In EBRD, we're also very interested to increase our activity here, but if you could give some reflections from your perspective.
Yeah, NBG was the first Greek bank to issue a green bond back at the end of 2020. And in general, I would say that 2 years later, we had fully utilized the proceeds of about 500 million. So this is a significant part now of our overall renewable energy portfolio of 1.6 billion. In terms of barriers, I would say it's actually it was a relatively smooth process for us because for investors, there was significant opportunity, and actually it allowed us to attract about 80 investors, international investors mostly, not Greek. So it allows us to reach a new crowd of investors interested in sustainability, interested in the transition of the Greek economy. And so it was oversubscribed at the time that we issued it by more than 2 times. Also, I think in terms of the barriers for releasing the funds, for utilizing the funds, that was also a relatively smooth process, I have to say, because there is a big pipeline of demand at the moment in Greece. We estimate, based on our NBG own research, that there is a further pipeline of about 25 billion until the end of this decade, which means there will continue to be demand for financing in this area. About judging from the investments we financed, about half was from lending that we provided. So therefore, I would say potentially in other markets, it's about matching demand and supply a little bit through such instruments as the green bond. But at least in the Greek market, based on our experience, these barriers were not necessarily a challenge. On the contrary, it was a very good experience for us. And at the moment, we're working on a broader sustainability bond framework that will allow us to finance not just green energy, but also sustainable projects more broadly.
Great, thanks, Ernestos. And look, we've got a couple of minutes left. And Katerina, I had a number of questions for you, but we've run out of time. I'm going to pick one for the audience, and I'm also going to bring in Dr. Ernestos. So if you could come in, the previous speaker, to answer this question. I'm going to ask you first, Katerina, but then I'm interested in broader views, which is, what is your view on the know-how of banks' personnel on the measurement of climate risks, and how can this be improved? It's a good question. So Katerina, you first, and we've got 1 minute, so very briefly.
Okay, thank you. I believe there's plenty of food for thought in that question as well. You know, across the globe, I believe that all the organizations are working towards a sustainable future in order to prevent the climate change. We'll talk about that. For many firms, this means reducing their carbon footprint, managing their supply chain, or even reducing waste. But climate change also brings financial risks, you know, which is a growing area of concern for all, for businesses, regulators, investors. So managing, I believe, the climate change demands a global collaborative approach across all sectors. You need to develop a holistic approach on assessing actually the climate and environmental risk management framework, taking into account relevant regulations, best practice from the industry. I believe all the validation process should start with the risk identification and materiality assessment, followed by the risk quantification and integration actually into the bank reporting strategy and decision making. I believe there is a great need to develop a robust approach actually to the integration of that into the credit risk assessment, as Ernestos also mentioned that before. The process, you know, should reflect the client maturity, the strategic objectives. And I believe that all this exercise should be an ongoing process in order to be able to reflect all the challenges and all the changes and all the information that that comes across this journey. And it's important maybe as last thing to note that calibrating actually the climate related risks could be a complex exercise, of course, as we know that. But maybe frameworks such as the TCFD could provide guidelines in order to enhance all this exercise and all these reporting challenges that we all face. But instead, we all need to regularly monitor and review the effectiveness, of course, of all the strategies that we implement as the environment and the landscape constantly evolves over time.
Thank you, Katerina. And maybe the same question to you, Dr. Noutsos, if you can. And then I know that we've got places to be, so then we'll wrap it up. I thought it was ambitious to try and squeeze in such interesting topics in 35 minutes, but I think we've done well. Over to you.
Thank you. Thanks, Russell. That's a very, very good response on that. I think that there's a lot of, maybe when you compare it to the past, there's a lot of alertness and a lot of interaction. So market practices are being developed, and there are a lot of practitioners, a lot of people working in that area. So I think a lot of people can leverage on this, and they can upskill and reskill. One thing that I think is crucial, and mostly you can see it some global banks, but it's being spread out, I think, across, is that in a lot of these areas, there is a need for sector-specific knowledge. So a lot of times you need to bring people who have a knowledge of sustainability issues, but who also have a very deep sector expertise to be able and formulate, measure, or provide the right kind of assumptions, the right kind of process, or even models to be involved in specific climate risk activities.
Okay, thank you. And well, look, thanks to all the panelists as well, so Chryssanthi, Ernestos, and Katerina. I wish we had more time, but I know we've got other interesting topics to discuss. So back over to you, George.
Thank you very much, Russell, and many thanks to all panelists.